Alright, so Assalamualaikum warahmatullahi wabarakatuh. Okay, guys, so again, this is the tutorial, but this part is focusing on writing off against asset or write off against asset method, or the short form is WOAA, write off against asset method. Right. So in this method, what do we need to do is actually to when we have asset, we have to straight away minus from the cost of the asset, right? When we receive a grant, we need to minus from the cost of the asset, right? Okay, so we see the question that asked on this part. Okay, it is on July 2021, right? Berkat Berhad acquired an agricultural machine to increase the production of the business. Okay, on 1st July 2019, Berkat Berhad received a grant of 200,000, okay, grant 200,000 in order to purchase agriculture machine that costs 600,000. Okay, the cost of the machine is 600,000. Okay, the cost of the machine is 600,000. The grant is 200,000. Okay, it is policy of the Berkat Berhad to write off against asset method. And so you see, the method is write off against asset method. So it is not a deferred income. This is a write off against asset method. Okay. The newly acquired asset will depreciate over 5 years. Okay. However, on 1st of July 2020, the company no longer comply with the condition attached to the grant. All right, and have to pay 300,000. Okay, now the question is unique. You see, the grant received is 200,000, but how much the company have to pay back? 300,000 more than the grant that the company received. All right, again, this is grant related to asset because the company want to purchase an asset, and it is a write-off against asset method. All right, so like always, we do all working. All right, so first thing first, when you acquired the asset 1st of January to the 1st of July 2019, you debit machine, credit bank, cash or payable, regardless how you pay. But in this question, you see, because it is a write off against asset method, you see, the cost less with the grant amount, so we get 400,000. So we record the machine at 400,000. We record the machine at 400,000. Do we need to record the deferred income? No need. Straight away minus. That's what it mean by write off against asset method. Okay, again, that's what it mean by write off against asset method. Okay. So at the end of the year, what happened? At the end of the period, 1st of July 2019, right? So the end is 1st of June 2020 lah. 1 year, right? Okay, 1 year. Okay. So the depreciation is 80,000 and accumulated depreciation is 80,000. Why 80,000? Because 400,000 divided by 5 years. 5 years, so we get 80,000 per year. You see? So the depreciation is based on after minus cost minus with grant. The depreciation is calculated based on cost minus with grant. So we get 80,000 per year. Okay. Next, what happened? Next, when there is a when there is the revocation of the grant, okay, so what do we need to do? So if there is a revoke of the grant, okay, so this is the calculation. We need to know depreciation without grant first. Depreciation without grant is 120,000 because we are going to use 600,000, not 400,000, right? 120,000. Okay, so 120,000 different with depreciation with grant is 80,000. So minus, we get 40,000 extra. Okay, because now when we don't have the grant anymore, okay, when we don't have a grant anymore, okay, remember there is the changes in estimation. So our depreciation from the previous year, we need to increase by how many years? Now 1 year, right? So we need to increase the extra 40,000. Here 40,000, we need to increase our depreciation in accumulated depreciation by another 40,000 because now we don't have grant. Because we don't have grant, previously you minus, right? Now we need to add back. So we add back 200,000 to machine. So now our machine is 400,000 plus 200,000 is equal to 600,000. So 600,000 value of machine, we do depreciation, it should be 120,000. But we do depreciation only 80,000. So we need to add another accumulated depreciation by another 40,000 because not enough by 40,000. How much actually we need to pay? We need to pay 300,000. So we need to pay 300,000. So this one is balancing figure loss, which is 140,000. Normally, balancing figure is the depreciation amount normally. But in this question, because we need to pay extra 100,000, right? Grant is 200, we need to pay extra 100, right? So 100 plus 40,000 extra, so it is 140,000. So basically, this is the working for write-off against asset method. Okay. All right, so we see the question. What actually the question asks us in this question? All right, discuss how the accounting treatment will be different if the company decide to use alternative method. What is alternative method? Alternative method from write-off against asset method is deferred income method, right? Write-off method, alternative method for write-off against asset method is deferred income method, right? So if deferred income method, how do we do? The grant received will reduce the cost of the asset acquired and recognized in the statement of financial position. The depreciation asset will be charged based on the reduced amount. This one write-off against asset method lah, right? So this one is not alternative method. Other than write-off against asset method is deferred income method. So we need to do a deferred income method answer in this one. The grant received will not affect the cost. Will not affect the cost. Or deferred income not affect the cost lah. So the grant will recognize in statement of financial position and depreciation will be charged based on original amount. Okay, correct, correct. So the answer is B. Yes, the answer is B because this one is deferred income method. Okay, we see C. The grant received will increase the cost of the asset. No lah, there is no grant to increase the cost of the asset, right? So the answer for C is definitely wrong. The grant received will reduce the cost of the asset acquired and recognized in the statement of financial position. The depreciation will be charged. This one is write-off against asset method. Depreciation will be charged only if the grant received is amortized. No lah, this one is no method for this one. Okay. Second question, calculate the amortization of deferred income that will recognize in statement of profit or loss if the company adopt alternative method for the government grant. If the company adopt alternative method, mean that the company adopt deferred income method. Because in this question, they adopt write-off against asset method. So alternative to write-off against asset method is deferred income method. Not alternative method is deferred income. But because this question is write-off against asset method, so the alternative method from write-off against asset method is deferred income method. All right. So if the company adopt a deferred income method, so the grant are going to be 200,000 divided by 5 years. Why 5 years? Because useful life is 5 years. So you are going to get the answer is 40,000. Easy lah. Okay. So next. Calculate the depreciation of the agricultural machine by the end of 30th June 2020 based on the policy adopted by Berkat. So policy adopted is write-off against asset method, right? So write-off against asset method, we calculate already 400,000 divided by 5, we get 80,000. So the answer is B, 80,000. Again, if it is adopted by the company, is write-off against asset method. So our asset 600,000, we need to less with the grant 200,000. So we have 400,000, the cost of the asset. We calculate depreciation divided by estimated useful life, 5 years. So we get 80,000 per year. Okay. All right. So next, choose the correct statement in relation to MFRS120. Okay. The question asks us to choose the correct statement. Okay. So amount of amortized grant related to the income will be taken to a profit or loss in the same period as relative cost of expenses incurred. Amount amortized, amortized grant related to the income will be taken to a profit or loss in the same period relative cost of expenses has been incurred. Correct lah, depreciation incurred, amortized also incurred, right? So correct. Okay. Grant in the form of right to natural resource can be recognized either by fair value or nominal value, right? So if you receive a grant, which is like a machine like that you receive, you can recognize either fair value or nominal value, plus any expenditure directly attributable to prepare the asset for intended use. This one also correct. If you receive an asset itself, regardless whether it is natural resource or other asset, you are going to record either by fair value or nominal value. Okay. Grant related to the asset shall be presented in the statement of financial position either by deducting a grant arriving in carrying amount, of the asset or by crediting directly to the shareholder interest. Directly shareholder interest ni, this one is the one that we not cover. We cover income only, right? Okay. So next, the company that has been, this one is wrong. So the company has been awarded license to operate from government are given the choice to record the grant either by fair value or nominal value. Is it correct? Yes, correct. License is intangible asset. So intangible asset, we can record either by fair value or nominal value, right? So 1, 2, and 4. 1, 2, and 4 is B for bola. Okay? Right. Okay, guys, so we proceed to our calculation here. To the next question here. Okay, so the next question on 1st of July 2017, the Luz received a government grant by 650,000 to acquire the plant. So the fair value of the plant is 3.2 million. So you see, 3.2 million. The grant received is 650,000. Okay, so the expected useful life is 50 years. With the nil residual value, the company adopt a straight line method for a straight line monthly basis method for depreciation. Okay. So the method the company adopt is deduction against asset, which is in other words, this one is actually a write-off against asset method. All right. So on 1st of January 2020, Telus Berhad no longer comply with the condition attached to the grant, and the grant has become repayable in full. All right. So in full, the question mentioned in full. Therefore, it is not more than 650. It is similar amount to 650. All right. So now, first thing first, how do we record the acquisition of the asset? So on 1st of July 2017, we record as debit plan, credit cash bank or payable by straightaway minus the grant from the cost, because the method is write-off against asset method. Okay. What else happened in 2017? Nothing. So we just proceed to the end of the year. We calculate the depreciation. Because it starts from July until December, year end is December, right? 31st December. So it's only 6 over 12 months. So we divide by 50 years times 6 over 12, we get 25,500. Okay. What else? 2017, nothing. So we proceed to 2018. Again, we calculate depreciation, but 2018 is full year. So divide by 50 only lah, no need times with month. It is 51,000. And what else? 2019. Again, another repeated depreciation calculation, which is 51,000 again lah. So should we proceed to 31st December 2020? No, because when 1st of January 2020, there is a revoke. Therefore, we do a revoke. How to do this revoke? Okay, to do this revoke, you see, I just put down the question first, the answer first. Okay, depreciation without grant is 64,000, right? Depreciation with grant is 51,000, right? So we minus with the extra depreciation is actually as 13,000. So it is for how many years? 1 year, 2 years, and 6 months. So 2.5 months, 2.5 years. So 13,000 times 2.5 years, we get 32,500. So this is the extra depreciation that we should incur in accumulated depreciation. Extra depreciation that we should increase in our accumulated depreciation. How much we need to pay? We repayable in full. How much full? 650,000 we have to pay back. So by right, the grant, the asset amount, the plant amount, we need to increase also by 650,000. So the balance figure is our loss, or in this question, the loss is actually equal to your depreciation that you haven't charged, the under depreciation you haven't charged for the last 3 years. Okay. Next, we see what the question asks us actually. Based on the paragraph above, relevant journal entry to record on 31st December 2019. 31st December 2019, what do we do? Only one, right? Debit depreciation, credit accumulated depreciation, right? So the answer is only A lah. Debit depreciation, credit accumulated depreciation, 51,000. That's all. All right. Based on paragraph above, the carrying amount of the plant is on 31st December 2019. On 31st December 2019, so the asset we record is 2.55 million because we minus with the grant, we less with the depreciation. 1, 2, 3. You can refer to the previous slide, the calculation. The first one, the first 2017 is for 6 months only. That's why it is 25.5 million only. So we are going to get the answer C, 2,422,500. All right. Last, not last, the third one. In the absence of the grant, the accumulated depreciation on 1st of January 2010 will be in the absence of the grant, right? When the grant have no more, therefore 3.2 million divided by 50 years times 2.5 years. Therefore, we get 160,000. The accumulated depreciation of the grant will be 160,000. Okay, because we times with 2.5 years, so we get 160,000. Okay, all right. Next, last question. All right. Relevant journal entry to record the grant repayable on 1st of January 2020. Again, I show you already this one. So by right, we just see one by one which one is the answer. Debit plan 650, correct. Loss 30,500, correct. Grant payable 650, correct. Accumulated depreciation 32,500, correct. So the answer is A lah, actually. Okay. The rest is wrong lah, because this one is, even though plant is correct, accumulated depreciation shouldn't be debit side. So wrong. Okay. Plant is correct, but loss arising is not 39,000. So wrong. Okay. Even though again plant is correct, accumulated depreciation is not 39,000. Wrong also. So the answer is A. All right. Thank you.